Most people see Google pouring billions into AI and think it's just another tech investment, another way to chase the hype. But what if I told you this isn't about chasing trends? It's a survival play. Because behind closed doors, Google knows whoever wins this race doesn't just dominate AI, they dominate the next era of technology itself. Let's start with where things stand right now. Google's CEO, Sundar Pichai, made it crystal clear, even with economic uncertainty, even with rising tariffs, even with some of their systems under stress, they're keeping their foot slammed on the gas pedal when it comes to AI infrastructure. And when you look closer, it's obvious why. This isn't just some PR move. Google remembers what happened not too long ago. They were the pioneers who introduced the world to transformers, the technology that made today's generative AI revolution possible. But when ChatGPT dropped, Google found themselves flat-footed. For a moment, it looked like they were getting left behind in the race they started. Now, they're making sure that never happens again. Falling behind in this era isn't just about losing some market share. It's about potentially losing their leadership in tech forever. That's why, even with internal pressures, even with economic pressures, they're pushing forward harder than ever. Their CapEx spending, meaning the money they put into building AI and cloud infrastructure, isn't slowing down. It's growing. And when you zoom out, it makes total sense. The demand for AI isn't shrinking. If anything, it's exploding. Startups, developers, enterprises, all of them are rushing to build with AI, and many of them are increasingly turning to Google Cloud. Not just Amazon, not just Microsoft. They're saying, we need what Google's building. And that's a big deal, because cloud infrastructure isn't just important, it's essential. It's the new oil of the AI economy. Without massive cloud infrastructure, these AI models, from Gemini to ChatGPT to Claude, simply can't operate. Google knows it, Amazon knows it, Microsoft knows it. That's why Google is treating AI like a survival game, because in many ways it is. Now, while the AI side looks bullish, there are some warning signs on the horizon, and they have to do with ad revenue. Google's advertising business, especially performance advertising, is historically resilient. When companies cut ad budgets, they usually slash brand advertising first, big image ads on TV or YouTube. Performance advertising, the type where you put in $1 and aim to get $1.50 out, usually holds up longer. It's more results-driven, so businesses cling to it during tough times. But if even Google's performance advertising starts to crack, that's not just a Google problem. That's a signal that a real economic slowdown might be coming. Advertisers cut branding first. If things keep getting worse, they start cutting performance spend too. And if that happens, it suggests companies across the economy are pulling back hard. Early signs show that Q1 might be relatively untouched. The bigger concerns will come from the commentary during earnings calls, the forecasts about Q2 and beyond. Because Google, more than almost any other company, has a direct pulse on how businesses big and small are behaving. From small startups advertising their first product to massive enterprises optimizing global campaigns, almost everyone touches Google somewhere in their growth strategy. If Google says budgets are tightening, that's a data point the entire market needs to pay attention to. But the story doesn't stop at Google. It's much bigger than one company's earnings report. Across the tech sector, there's a growing understanding that AI isn't just another tech trend. It's being described by top investors like Jeff Richards as the biggest tailwind of our lives. And when you look at history, you realize they're right. After the 2008 financial crisis, new technological revolutions like smartphones and cloud computing exploded. Companies like Facebook, Shopify, Uber, and Stripe were born in that chaos. Back then, everyone wanted a piece of mobile and cloud. Now, it's AI. Richards and others in Silicon Valley are treating this AI wave the same way they treated mobile and cloud back then, maybe even more seriously, and they're investing with a 7 to 10 year mindset. They're not worried about quarterly noise or short-term market jitters. They see what's happening on the ground. Engineers are building revolutionary tools. AI is starting to power every corner of software and infrastructure, and the companies that get this right now are going to dominate for decades. Of course, there's uncertainty. Regulations, tariffs, elections, there's no shortage of unknowns. And some companies are already tightening spending. Some hyperscaler spending has caused ripple effects in the power and data center sectors. But when you zoom out, the core trend is unstoppable. And that's exactly the moment we're living through right now. The early signs are already everywhere, if you know where to look. Companies like Snowflake, CrowdStrike, and Adobe aren't just talking about AI anymore, they're cashing in on it. Snowflake is up 31% over the last 6 months. CrowdStrike is also up by a similar 21% off of lows. And Adobe, while not seeing an immediate stock surge, has already built over $125 million in recurring revenue from brand new AI-first products like Firefly and Acrobat AI Assistant, starting from zero just a year ago. Beyond that, Adobe now has more than $3.5 billion in AI-influenced recurring revenue across its portfolio, including flagship products like Photoshop, and they're aiming to double their AI-first revenue over the next 3 quarters. This isn't theory anymore. This is real money, real growth, and real momentum. And yet, some people still believe the AI boom already peaked because ChatGPT had its viral moment. But that's like saying mobile technology peaked with the first iPhone. In reality, we're standing right at the edge of something much bigger. Just look at OpenAI. In 2025, they tripled their revenue to over $12 billion with ChatGPT Plus subscriptions, enterprise API usage, and deep Microsoft integrations leading the way. They've grown into one of the fastest scaling tech companies in history. And with projects like Stargate, an $18 billion AI infrastructure plan, bigger than anything we've seen before, they're building the foundation for AI's future at a scale that rivals what AWS once did for the internet. OpenAI's private valuation has now crossed $300 billion, putting it ahead of SpaceX and sending a clear signal. AI isn't just another tech trend. It's now the centerpiece of innovation, investment, and global competition. And Google's leadership understands this. That's why they're pushing harder than ever, because the early flashiness, the viral ChatGPT moments were just Act 1. The next act is about deep integration. AI, woven into how work gets done, how security is handled, how logistics, healthcare, and education are transformed. And here's the part most people still underestimate. At the recent HumanX conference in Las Vegas, some of the top minds in AI made it clear, we're not just looking at another tech boom, we're looking at a global economic shift. Sam Altman, CEO of OpenAI, argued that AI could lead to a new era of deflation, where the value of money goes up, not down, because AI makes it cheaper and faster to produce goods, deliver services, and operate businesses. Imagine a future where the cost to create software, manage logistics, and serve customers drops by 90% because AI is doing the work around the clock for pennies on the dollar. But the leaders at HumanX didn't just talk about the upside. They also warned that companies rushing blindly into AI are missing the bigger picture. Arvind Jain, CEO of Glean, emphasized that success with AI won't come from throwing money at the problem. It will come from building real AI fluency inside organizations, training teams, redesigning workflows, and slowly weaving AI into every layer of business. Because companies that treat AI like a shortcut, they're the ones most likely to fail. The ones that win, they'll be the ones that train, adapt, and scale, turning AI into a force multiplier, not just a cost cutter. It's the same shift happening in jobs too. New roles like product engineers are emerging, professionals who don't just code, but who blend strategic thinking with hands-on AI tools to build faster, smarter, and cheaper than ever before. The bottom line is, AI isn't just upgrading technology, it's rewiring the economy. It's shifting how value is created, where the profits flow, and what kind of skills will dominate the next decade. That's why you see hyperscalers like CoreWeave pumping billions into AI infrastructure, even as Wall Street questions the timing. And speaking of CoreWeave, if you haven't seen what their IPO just exposed about the AI market, stick around, we break it down in another video at the end of this one. But the key takeaway today is simple. If you're betting against AI right now, you're betting against the biggest platform shift since the invention of the internet. If you think innovation already peaked, you're about to miss the next generation of trillion-dollar companies. And if you believe Google, Microsoft, Amazon, and the next wave of AI-first companies are slowing down, you're ignoring the same warning signs that every previous tech revolution gave off before it exploded. Sure, there will be bumps. Yes, there will be overhyped ideas and failed experiments, but the overall direction is clear. We're building an AI-powered economy, and the companies embedding AI deeply into their DNA today, in cloud, chips, cybersecurity, infrastructure, are the ones that will own tomorrow. The AI race is heating up. The winners are being decided right now. And Google, they're not just trying to stay in the race, they're trying to control the entire next era of technology. The next chapter of tech belongs to the bold. Which side will you be on? Thanks for watching. If you found this breakdown helpful, smash that like button and subscribe for more deep dives on how AI is reshaping our world. And make sure you check out our CoreWeave video next. It's linked right here on the screen. You'll see why the real AI winners and the real risks are just starting to surface. See you there.